Is Sunil on the line, or we're going to miss Sunil?
I'm here. I don't know whether you can hear
Hi,
me.
Sunil.
Yeah.
Morning, afternoon, whatever. Okay,
Morning
thank
to
you
you.
very much. I think the team from RBI really set the context very well. And as I said, if we could have a gram of gold for every conversation we have had on monetization, I think we would be very, very rich. But this time we will actually take it to very concrete actions. Okay, so I would first start off. So this conversation is very specific, so let's stick to the subject. It is about role of banks and exchanges. So we are assuming financialization will happen. So it is the role of banks. I will come to Mr. Kamlesh Sharma last, because regulators always have the last word. All right? Yes, you should not have a role. Exactly. You are just having an oversight. Let me put it like that. So I will now go first to Sunil. Sunil, you have obviously you have lots of discussions. We have had many talks about it. Now, financialization is really now becoming important about gold. Even globally, we are all attempting, right? I mean, we are looking at websites which can do this, etc. So I would ask you to first open it up with some comments and some remarks from you, please.
Thanks. I think you and I both have been involved in the industry in India for so long. I really think we're at a very important juncture now, where it's important to forget whatever has happened in the past and look at where we are. We've got a really good situation to relook at the whole financial sector involvement in gold, just because our balance of payment situation is much stronger. The dollar reserves are very strong. We now have banks who comfortable in dealing in this business for so many years and now are stable and committed to the business. We have with IBX and IFCA a regulator and an exchange who are committed to implement policies. We have a customs department which is now flexible and willing to use technology, and now, of course, with RBI, they're willing to look at it fresh. Plus, we've had the experience of the sovereign gold bond, which has been incredibly successful. So many things have happened in the last few years that I think this is the ideal time to, start with a white piece of paper and say, okay, what have we learned so far, and where do we want to go?
Yeah.
So that's what my remarks would be.
No, good points. Thanks, Sunil. First, again, I'll go back. We have to close it by 12:05. So I know you're all bankers, so you know how to be brief. But one thing I want to make it very clear is, whenever we talk of financialization, monetization of gold, there was always an issue about, if you financialize gold, involve banks and start, say, a gold coin or something, will it increase consumption? One thing everybody has to note in India is, whether banks are there in selling gold and buying gold back or whatever, whether banks are there or not, we will continue to consume gold, because there is no limitation here, a restriction in buying gold. If you don't buy from a bank, you will buy from a jeweler. So if you buy from a bank, to that extent, you may not buy from other channels. So it is very important for us to understand that a new channel does not mean additional demand in gold. That's very important for the regulators to understand in the first place. Whatever gold is required is today available. So that is a fundamental principle that people have to keep in mind. Now I will get.
Can I just
please.
Add
yes.
that? Because I know that comment. There's a context of the comments which we should talk to the audience. The fact is that banks are hamstrung right now, because banks can sell gold to the wholesale market, but can't sell gold to the retail market.
Exactly.
So banks can sell gold, but can't buy gold, either from wholesale or from retail. So these kind of aberrations from the past have hung around with us. And it is time, like you just said, to relook at this whole thing in the fresh context, saying, why are these anomalies there? Nobody can explain it. You can do a full forward contract on gold, but you can't do it on silver. So there's so many historic issues that have been there in the circulars, which we can address now.
Yes. So I will now first come to Manish. I'll start from there. Manish, do you think banks are really now sound enough? I'm not talking only about your bank or HDFC or of these big banks, because when RBI or any regulator takes position, they have to take care of the weakest link in the chain. All right. Do you think banks in India, domestic banks, are capable of handling bullion risk if they take it on the balance sheet? I want you to answer that question clearly.
If we see the Indian banking ecosystem, 1999 was the time when RBI started issuing this nominated agency licenses, and post that, most of the activity which was being done was import and sell. However, at that point of time, when we talk about 1999, that was the period when we also saw Asian currency crisis and the banks in India managing and coming out of that. And if we look at a broader picture, gold is nothing else but a currency.
Correct.
So I think the banks in today's world, or in if we speak about specific Indian banks who all are authorized AD1 license holders, they are very well managing their liquidity risk, their market risk, and their exchange rate risks. And gold also requires only these three risks management, which are very well in place in all the banks. And I think time has come when banks should be given a broader framework to operate within the ecosystem for gold, and not specific instrument to be handled like GMS.
Thank you. Now, I'm coming to Harsh. My question to you is this. If RBI actually calls for a meeting, RBI SEBI, and asks the bank, okay, we want to financialize gold, tell me what are the three things we need to do immediately? What comes to your mind? What would you suggest RBI does?
I think one of the it's Eurozone. The very first thing is, I think there's a way need to change to look at gold.
Yeah.
As in, because presently it is as Manish said, it's highly regulated, and the
Yes.
bank's role is quite restricted. Now, if you change the mindset, you say, okay, just treat it as a currency. Now, if you treat it as a currency, and then the whole set of innovation can be done in a gold, from product, from funding, from interbank lending, swaps. So whole lot of things can come in. Just understand. Look at the irony where jewelers or non-regulated entities are able to accept gold as a saving deposits, but bank cannot.
Yes.
So if this role has transferred to banks, or banks being more empowered, then it will create the whole new ecosystem.
Right.
I think that is if that happens, I think then the entire banks will invest in this ecosystem. As Manish said, bank is well equipped because they understand how to manage risk. What risk? Liquidity risk, credit risk, market risk, price risk. They understand how
Yes.
to run their balance sheets. But products are not there. Everything is minutely regulated. Now we have to come out of it. We are proponent of free market. Let RBI give a broader framework, and the bank to decide how to operate within those broader
I
framework.
think brilliant point, Harish. I think it is important that banks speak with that confidence. Now, coming back, Neville, you are big in gold business as well. There is a gold loan business, which is also financialization, etc. But you still lack products, as Harish said that. If RBI were to relax that situation and say that banks can now actually operate with gold on the retail front, you can open investment deposit accounts, etc. Do you think your bank's systems are ready to, as bank, not just your bank, I'm saying, every bank, you think as a system they are ready to handle bullion? Probably it's the same question I asked Harish, but Manish, but I'm just asking you with a different color now. Do you think banks are ready to do that?
Yeah, so obviously, I think all banks have robust systems which already manage, the various asset classes and currencies. So I think obviously there will be some more tweaking needed. So it's not like, plug and play. But nonetheless, I think the infrastructure is there. And if we get such a, regulatory platform where we can do much more, I think banks will be very keen to start.
So you think it will be?
Yeah.
It is also true because when $60 billion, just gold alone, is the amount of investment that people make. I'm not saying all of it will come into the bank, and retail savers are willing to put $60 billion every year, keeping it completely outside the banking system, and will be, actually, it's not a good thing when you want to financialize gold, even, and particularly when the economy is growing at the pace at which it is growing, right? Now, in recent years, see earlier, one of the issues, again, talk to any regulator, one of the issues is the market was very OTC. So even if you are allowed to buy gold, it is fraught with risk. And we saw that in 80-20 and things like that, when you have to sell gold, etc. Currently, what do you think has changed? This is again, I'm coming to Neville. What is it that has changed? That if you go back to your bank board and say, I want to do these things in this thing, because the board is going to be another big thing. It's not like RBI can say yes and board will immediately jump at it. What do you think will be the board's this thing? I mean, you think that the ability to handle is there? That's the question, or the risk appetite is there.
So this, I think, I think if we get a regulatory framework, right? I think, and I can speak on, on behalf of many banks. I think the banks here have been at least in business for at least last 10 years. They understand the nuances of gold, of the physical piece, and they know what is the risk, that is in gold. I think there is sufficient enough of understanding, intelligence to manage this risk. So if we get a regulatory framework which allows us to do, and we are able to kind of devise a system or a structure which kind of says that these are the risks and these are the risk mitigants, I don't see why any board of a bank will not permit the bank to do it.
Okay. So, Manish, do you think a domestic exchange, in whatever form, IIBX of course is there, because now the sourcing of bars becomes easier. The biggest problem is if the banks go and do something and the bars they have sourced, like ETFs, bars they have sourced is suspect, then the banks get into a lot of trouble. Now with the exchanges, that headache is taken. At least the physical part of it should be easy for you to handle. So do you think that makes a difference in the current scenario?
So to answer it, it would be two-pronged. The exchange facilitates that transmission or that acceptability. However, other than exchange also there will be other avenues available for the banks to still accept gold, which we are already doing in the form of GMS right now. So there would be two type of, my assumption is there will be 2 or 3 modes of flow of gold to the banks. One would be in advent of exchanges. People may buy an exchange and give a settlement instruction that, okay, transfer it to bank to convert it into a credit to their deposit account or to a term deposit account. The other one would be people coming with physical gold still, what it is happening right now, but not in a big way. That would still continue. And the third would be where people would directly buy and hold, like what in the RBI presentation they mentioned, that the option for bank, for the customers to have gold savings account where they can ask or just transfer money into gold and then vice versa. So I think all these 3 modes would coexist, and exchange would become a catalyst, because with the advent of exchange, there will be a lot of awareness which will come to the retail in retail public, because of the very nature of the people who are associated with investments and capital markets would immediately latch onto this.
Yeah, and one of the things again to add here is when we talk of monetization of gold, we always think that people should bring their old jewelry. The important thing is you can monetize gold in 2 ways, which is what Turkey did. I mean, your study in Turkey was good. One is you monetize past stocks. You can also monetize future purchases, which is what financialization must begin with. You have to make people comfortable that they can hold a gold account in a bank of their choice, and the bank will return the gold when they ask for it. Then they get familiar that, yeah, I get my gold back. Then I will bring my old jewelry. that 1 lakh which I today want to open a deposit account, if I can put it in the form of gold, that is also monetization, because I'm not buying gold. I'm leaving it to the bank, but it is in gold terms. It is up to the bank to manage the gold risk. So I think it is also important for the regulators to understand. Now I have to come to
Can I,
yes,
can I just,
Sunil.
I think I just, from an international point of view, just point out what you said is, and I think some of the guys on the platform also said the same thing, which is right now the RBI policy is kind of mixed and confusing in some ways. For example, like I told you, you can sell to wholesale, but you can't sell to retail. You can sell, but you can't buy. You can hedge on MCX for your gold deposit scheme, but you can't hedge otherwise. So there's a lot. You can hedge overseas for OTC market, but you can't hedge on IABX, or there's no clear directive about that. So there's so many areas where RBI in the past tried to be risk averse and tried to be very directive to the banks. But now maybe they just need to look at the framework and say, look, can I just set broad guidelines and let the banks decide how they want to manage the risk? I think that's where the biggest benefit will come.
Sure.
Because there are so many venues, the exchanges, the IIBX, the GIFT City itself as a venue, as OTC venue, right? The exchange MCX. Still, the banks, after MCX has been around for 20 years, the banks are not trading on MCX. Why? Right? So there's so many gaps which are because RBI historically had concerns and they put policies in place which they have not unwound, right? Which they need to liberalize now. I think it's very important that the discussion should move towards that.
Yes, I think Sunil, you made some good points there. Now I have to bring Kamlesh here. Kamlesh, you have. I know you don't speak for RBI, so on your behalf, I will just give the disclaimer in any case. But you have been in RBI, so we all understand the importance of financialization and RBI's thinking, which has not been given the context. It was all right, but the context is changing. Now, what do you think is the regulator's view on gold? Because I want you to give a broader this thing. I know, we always say, yeah, we are for gold. But any conversation, I'm sure Arvind also will say, with RBI on gold, there is a certain reticence to discuss. Why do you think that is the case?
Yes, thanks for starting with the disclaimer. As I said yesterday also, we have to, in fact, even within the RBI, these questions may be asked actually amongst departments. Now, my colleagues from the team, they are coming from a specialized department which looks at gold only from the point of view of course, the study encompasses various aspects. That's another part. But the Department of External Investments and Operations, for them, gold is one of the foreign assets, one of the foreign currency assets. So that goes into foreign currency, one of the foreign exchange reserves management tool, which goes into the mix of the total foreign exchange reserves. So so they have this international outlook. So how much proportion of India's foreign exchange reserves should be kept in gold? Central banks have been buying golds. The point Professor was making towards the end of the day yesterday. So how much gold? So those will be the policy questions they are asking. Now, this team is completely removed from the perspective of the department which looks and which makes the regulations for the banks, non-banking finance companies and other financial institutions, what kind of products they can offer, credit against what kind of guarantees they can accept. So that is where most of my panel members are actually looking at those regulations, the interbank regulations, risk management directions, what they can do on the derivatives side. So the problem is perhaps steeped in the overall, what I should say, very broad mandate the Reserve Bank has. It's about financial stability. And because of legacy issues, because we sometimes forget, because our orientation is more and more international and more market oriented, we forget that any disruption about something which is steeped into the hinterland, where the rural economy is very, very deeply integrated, if there is anything seen as a disturbance or a disruption, that is something which RBI tries to avoid at all costs. Again, I am not aware about what is the current thinking. Of course, with the changing context, the narrative also should change and the thinking must definitely be changing. So this is one part that perhaps sometimes other things take more precedence over other things. But from my limited experience, what I can say is that when you have an IFSC now, and you want to experiment with whatever Mr. Sunil Kashyap also is telling, makes eminent sense. And in fact, we can imagine that if you are talking and these points are raised to the Reserve Bank also, who are looking after this, that how much leeway they should give their banks. Right, so it makes sense that yes, these are difficult. So, but with IFSC now we have an avenue for experimenting. If the IFSC branch or IBUs of Indian banks are still required to comply with the Reserve Bank directions on a set of issues, especially the prudential part and the operational part, but the foreign banks IBUs, they can do whatever else they are doing in the rest of the globe, and if they can demonstrate what can be done, then I believe that it becomes easier for the domestic regulator, because the industry, the domestic industry, the IBUs will then be able to take it. See, we can do it better. It is our clientele after all.
Absolutely.
They are offering these products and services to my client. I know them better. Yeah. So this is perhaps one way of my looking at it. But I believe that with this presentation and when the dialogue opens, I think that it's not very difficult to see that the regulator also looking at the positives.
Sure. Thank you very much for that. Now, I just, as I said in the beginning of this, I want to take it to very, very specific actions, at least thought processes. And you made a very, very good point. You know, they can allow now with IFSCA and the regulatory authority, they can allow what foreign banks do generally in the globe in IFSC within limited framework, so that the domestic banks can prove to RBI that they can do these things within our own oversight, but in a foreign this thing. I think that's a very good, very good point.
For complete clarity, so what I am trying to tell that even so, instead of asking RBI or expecting RBI to allow Indian banks also to do the same thing from day zero, I want that because IFSC regulations are enabling. So even if foreign banks amongst themselves start doing it,
yeah.
And even as Indian banks IBUs are looking at it from the sidelines, then this becomes a case and RBI may perhaps see the point more clearly.
I agree.
So IFSC cannot expect, because we have enabled for everyone, for
sure.
every IFSC banking unit.
But Kamlesh, I mean, I'm sure Sunil will step in here also. We also have to understand that we have come in a little late into the party. Thankfully, we are very big. We have come a little late into the party. People, particularly foreign banks who are already in the bullion system, for them making a change, particularly when they are making a certain amount of money, is going to be a little more difficult than our experimenting with our own banks. See, unless you give competition, it's not. I mean, today Indian banks are amongst the best in the globe. So just to leave out this piece, to say, oh, you are not, we are worried about it, may probably not be the thing. So instead of relying on that, I will take your point, but I would still say, instead of relying on foreign banks, it's important to rely on our Indian banks. Now, coming back to the next phase, another 15 minutes we have, and I would like to take it up and give you back 15 minutes. Very specifically, what are the things that we would expect RBI? See, you can't say, again, there must not be a grand reopening of the scheme, I doubt. One is the scheme itself, the monetization scheme itself is fraught with a lot of operational things. I mean, they spoke about Turkey. We have studied Turkey. In Turkey, you just go with a jewelry on a gold deposit days. There are 2 days in a week or 1 day in a week. You simply sit across the table and you are told that it is 22 grams, want it, don't want it. You say, no, it was 24 grams. You say, no, this is 22 grams. 2 grams is mine, whatever it is. Instantly, the customer agrees or walks away. Agrees, 22 grams is credited, deal done. Here, you have to take it to some, purity verification center, wait there for 4 hours. And let's be very clear, I mean, nobody's going to do that. Okay, unless, it's not possible. So, first of all, the processes have to be simplified. And the onus has to be given to the banks to negotiate with the customers. That's one. Second, my own this thing will be gold coins. Indian gold coin was an extraordinary step to make the banks come to it. So, on that basis, I am now going back. Now, Neville, what will be at least one thing that you will tell RBI to do immediately? Very concrete, like if I have to prepare a one pager, if you want to come back, we can come back. what will be that one thing you will tell them, make this change now?
So I'll say two changes.
Yes.
So I think there has been ample discussion about gold being treated as CRR,
Yes.
which is what I think Turkey has done.
Yes.
And I think that kind of, enables banks to reach out and, get that metal or gold out of people's households. So I think that is one. The second thing is I think there's a need to expand the definition of monetization.
Yeah.
I think like Mr. Kashyap said that you can borrow but you can't buy. So monetization is a, kind of a, I think the definition needs to be widened, that if a bank can sell, a bank can buy. Right? Now we are talking about close to 150 tons, which is kind of getting recycled in India. But if this were to come into the banking system, I think, it will have huge ramification for the market positively.
Absolutely.
So I think the reason we can't do that is because I can only borrow.
Yes.
But if I can borrow and the customer trusts me to give me the gold deposit, then the customer will also trust me that when they're selling it to me, I'm giving them the correct price.
Yeah.
So I think these are probably the two things that
Great.
I usually tell RBI.
Harish.
My perspective here is, in fact, you have also echoed the same thing. Getting back gold first, which is past, is little difficult.
Correct.
Because there's emotional values and lack of ecosystem which would take some time to build.
Perfect.
And for that, the trust is needed. And
Yes.
unless this is not there, this is not going to work. So what I think more focus effort on the prospective first.
Correct.
And then get back to the retrospective, how we can take it back. So prospective basis, I think the very first thing is gold saving account. If that can be open, I think that would be really a big move. And also not only the gold saving account, because when the bank has gold or saving gold either unallocated or whatever is there, now if they need funding, there is a mechanism where the bank can liquidate or can, because this is as good as money. So can they get a swap line open from the bank?
Yeah.
If that can be open, as a CRR is there, swap line can be open, that is a very initial basic step, and that would further increase the liquidity for the bank and would encourage bank to manage and create the ecosystem around it. That is what my take is.
That's perfect. And with the exchanges coming in, the bars, what you swap, can always be an exchange delivered bar. Then there is no confusion at all, because the exchanges have already certified that this bar is conflict free, it is properly sourced, and it is pure. That is where, to come back to this, exchanges are going to help the banks to monetize gold, provided the regulatory framework is there. Now, Manish, over to you. Then, so Sunil, I'm just coming to you in a minute.
So
I want you to specifically speak about digital gold. Manish.
So in terms of ask would be only one gold savings account, no restriction on how the credit goes into that account by way of conversion of currency or by way of deposit of physical gold. And I would also like to leave 2 points to ponder about in this terms. Point number one is, we have all talked about India having around 25,000 tons of gold. Now, if we look at the monetary value, we are sitting at on $1.5 trillion of gold, which is a foreign currency asset. And out of that, if we think that 66% is consumption, which is in the form of jewelry and Sridhan and all, but still it leaves us with $500 billion of investable wealth in private hands, which is almost like equal to our foreign exchange reserves. So is it okay for us to leave it unattended and not do anything to bring it back or bring it into the financial sector? Point number two is, we have always harped upon that GMS or any savings scheme is going to be successful only when you offer higher interest rate. That was the change between the old GMS and the new GMS. But still till date, we see only temple trust golds flowing into it. The private gold has hardly not even a ton. If we take a parallel, we have ETF. ETF in 2008 was all funds put together less than 5,000 crores. Between 2018 and 2022, the funds under AUM have crossed 20,000 crores. So there has been a net accretion of 15,000 crores on ETF, in ETF. Does ETF pay any interest? Still people are holding ETF. Still people are investing incrementally in ETF. In fact, ETF, forget about paying interest. They charge expense ratio, which is close to 1% every year. So the investor very well knows that in 10-year time, he's going to lose 10% of appreciation which is going to happen in gold. But still we are seeing accretion over there. So I think there are few things which we need to ponder about, and the very reason of GMS not being successful is one is ease of deployment and withdrawal, which just does not exist there. And the second thing, non-availability of liquidity. Today, anyone holding gold wants gold as a safe investment where he can, even overnight needs money, he can liquidate and take money against that. But GMS doesn't offer any kind of respite in case of emergency need of funds.
I think that's a good point. Now, Sunil, I'm just going to come back to you.
Yeah. I just want to add one thing, Manish, what Manish said. You know, you talk about financialization. There's one aspect we never talk about, which is there is 4 lakh crores, I think, of gold which has been monetized in terms of what is called gold loans.
Yes.
Where retail customers have given their gold and is held with banks and NBFCs and converted or swapped into rupees for short term. Right? That is financialization. We never look at it. RBI is comfortable with that. But it's not comfortable for banks to accept, buy and sell that gold. You can lend against it, right? But you can't buy it, you can't sell it. So it's a bit cockeyed. And I think what I would just say, if I can, so is let RBI or let the regulators look at domestically held gold as a, for the controversial word, as a secondary currency in the country. It is our currency, right? Let us look at it as if it was like a rupee, an alternative rupee, and give it the financial framework that allows that currency to flow into the system. Buying and selling, lending and borrowing, earning interest, etc., lending against it, using it as collateral, whatever. But look at it in that framework, you know, doing swaps, doing hedging, buying it, borrowing, etc. Look at it as our own internal secondary currency and let it come into the financial system like that.
Yeah.
Yes,
I think,
Sunil, just to add to that, as you rightly said, the current RBI framework allows the bank to operate in one ecosystem of gold, which is basically lending to jewelers, both in the form of gold metal loan as well as working capital requirements of them. Even from consumers' point of view who have bought jewelry, for them also finance is available. But it has shut the door for banks in the investment aspect of gold. So that is something which needs to be corrected.
Yes. See, it's a important thing. Again, we all understand. Risks never disappear. They just get shifted. By RBI saying, okay, banks can't take these kind of risks, that does not mean these risks have not disappeared. People still invest with jewelers. They lose their money. We have seen jewelers failing. And are we saying that that doesn't affect the banks? They have also defaulted on loans in the banks, right? So the risks of jewelry schemes don't disappear just because banks don't take it. It's just that it's not direct to the bank. In fact, with direct to the bank, it will be much better because you will be controlling it. So that is this thing will be to probably this time go to the RBI and, you know, clearly give some hypothesis like these things. You say by taking that banks are avoiding the risks. No, they are not avoiding. In fact, their risks are increasing because someone who has borrowed from the bank is borrowing from the jewelers, and anything going wrong there, in a way, is going to affect the bank. Second, selling gold coin does not mean you are selling more gold in the country. In fact, you are selling standard gold in the country, which will be fit for circulation. Third, Sunil, I want you to come in here. Digital gold. I think it is a very, very attractive and a popular form. It is reaching even the urban, rural areas, small fractions. Now, it has to be regulated. The reason is that is monetization of gold, because that gold can be again lent. The point is keeping the banks away from these digital gold. You are again giving it in the hands of players who are unregulated. it is important, therefore, we look at the entirety of monetization, as Neville rightly said. It's not about one thing; it's about the whole thing. See, the good thing is, from what we have presented, we saw RBI's presentation. Most of the points are the same. Give us CRR benefit. It is, I would in fact say, not a CRR benefit. I'll say give some incentives to the bank. Initially, handling bullion is tough, but the good thing is exchanges have come in. So, to a large extent, can we say gold recycled gets converted into EGR? Now, how they do it, let the jeweler collect it, but he gets credit of EGR. What he does with the jewelry he resells, we don't care. Many things like that should be attempted in our view. I think it is a time to probably revisit our recommendations, probably give new recommendations or the same recommendations in a newer context, and help RBI and the other regulators to come to conclusion. That's my point. Sunil, would you like to simply, I would just want you to, because I know you are also supporting a digital framework. How do you think that pans out in terms of this monetization?
Yeah, I think it's the same thing, right? You mentioned about, Harish mentioned about savings accounts, right? The fact is you have a sovereign gold bond, which is the same thing. The government accepted rupees and they're giving gold in return. So when the government can do it, right, why can't banks do it? And so I think that's the, once you allow banks to offer a savings plan, that will automatically become digital, right? Everything will digitalize itself. You don't have to have physical and backing it. So it goes back to the same thing, that I think the banking infrastructure is very sophisticated. In the last 15 years, the use of technology, risk management has really been upgraded. And so it's time for RBI to just set a broad framework and not specify you can offer this product, you need to do gold monetization like this. For gold monetization, they go through the CPTC route and they explain so much. But when you give a gold loan, there's no specification. The bank decides itself. They do their own assay and they take the gold as a collateral. So it's it's time for RBI, I think, just to step back and say, okay, I let the banks decide and they can then innovate in terms of the products they want to use within the broad framework.
I think that's again good. I'm just going to bring it to a close.
Just one very small point, because what Mr. Som was telling about that, whether we revisit our recommendations and our asks from the Reserve Bank or suggestions. So I think we will also need to nuance them to the Indian context very carefully.
Yes.
Because it's very tempting to actually latch on to the examples. I myself was actually looking at the Turkish example. In fact, I had a discussion with Ajit only then, because you have to pitch it in the sense that we give the confidence that we are talking about completely after understanding. Because this idea about CRR, now it looks completely logical, but I don't see any bank actually who are anyway flushed with the government securities. Right, even SLR, they are holding in excess.
Yes.
Because it pays. It
Correct.
pays a handsome interest rate, and there is such a vibrant money market, no? So perhaps this is something which may not be of much value actually under top of the list.
Absolutely.
When you are looking for that, gold should be recognized as part of CRR holdings. RBI will, I'm not again talking from the behalf of RBI, but anybody would think, okay, so they are getting into this much. They will sell all the G6 and they will buy all the gold. Just as a
sure.
So
Kamlesh, you made a right point. CRR anyway has always, sure.
Just want to add here, as he said, Kamlesh ji, about the CRR. So CRR is basically where there's no interest bank is earning. Now, if the bank is having gold in their idle gold or as in a saving account till it is not being lent, now if this place it with RBI, effectively zero interest currency, zero interest rate from the RBI, so bank will save directly that the money which they can actually invest, and that is where the 4% is huge amount. Out of that, even 1 or 2% is, first is that money itself will come into the financial system, and with that financial system, that will further create credit. That creates credit, and secondly, banks will earn because.
No, Harish, you're making a right point. The point is, sure.
Because we can talk on the side. Actually, because that is the whole point. Because it is logical from where he's coming in. It's very logical because you can earn, the banks will lend more. But the whole idea is the monetary policy operations.
I agree.
My colleagues here, so how do they control the credit? So this is the whole point. So we should be very careful in not stepping into the other areas. It can distract our, that is the point. Everything will be logical only, but then if RBI does, because RBI cannot do monetary operations with gold.
Sure. No,
That is
Kamlesh,
Actually,
you
it
made a
opens
right point.
arbitrage between rupee and gold, like you borrow 0% and place with RBI and release your rupees. So it gives
Look,
us clean 5% arbitrage.
What Neville said was again something which we had already presented to RBI. All I'm trying to say, that's why I just converted it to say certain things could be very sensitive in the short run. He only made a point to say there must be an incentive, because if you are holding on to surplus gold, if I am monetizing gold, I took 800 kgs from somebody, what do I do immediately? I may not have credit thing. Now, the other option is, create a nice interbank market on lending. So there are ways of, as they say, skinning the cat. But his point was about incentives to the banking system, which I think we all say that. And so I will now finally, just a quick one, and then I'm winding up. We have been talking about it, and there have been various things. SEBI has now come out with this, IFSC has come out with this. Do you think it's time for RBI to reconstitute a small committee of the industry and then really bring this to a gold desk or something like that for a while? Do you think this is only to the panel members, it's not for the RBI members? Okay.
Right. So in fact, we can just go back to RBI's own report of 2012-13.
Yes.
It can look dated.
Yes.
But the recommendations.
KU Rao report.
Yes, KU Rao report. So recommendations actually include
yes,
this,
a gold body.
Corporation, a gold body. In fact, there was a sentence about how RBI should be actually actively involved as part of it. Should be under the Reserve Bank's this thing. So maybe the industry can just go back to RBI on that.
Even we don't even need a body. What I'm saying is, at least form a standing committee, like what Gift City did for the IIBX, right? I mean, they just put a few advisors and, till it was done, they just kept going so that it dissolves on its own. Do you think it's Manish?
Yes, absolutely. It's a need of the hour.
Harish?
Yeah, definitely. I think not only the context of India, where we have goal, where that is out of the system and stopping, the growth, which is like depriving the growth capital. But in the prospectively, if you look at from the geopolitical conflict which are there, and also falling faith in monetary system across the globe, where the people will move further to gold.
Yeah.
And if that is there, then it means it is very important that we need to put in place framework where the gold can be financialized, either putting up committees or others. We have to do it urgently.
Neville?
Yeah, gold has too many regulatory touch points. So I think one body which addresses everything.
And it need not be a permanent body as well. So we don't create capital investment, but a standing committee kind of stuff. Sunil, you think it makes sense?
That's the way it's done everywhere. So I can tell you, in China they did the same thing. Even in Turkey, when 1993, when they opened up, they had actually got a committee of advisors who helped them through the framework. So I think there's a precedent for that everywhere else. Even in India, whenever there's a deregulation in any area, whether it's equities or fixed income, they have a standing committee of advisors who help them out.
Yeah, and I also want to tell the audience here, see, Turkey was just an example. We are not going to replicate Turkey. Turkey was just an example. In fact, China, with their gold saving scheme, has also proved how this can be, monetization can work. They didn't go into the monetization because they want more gold, their citizens to hold more gold. But it is important that we use Turkey only as a reference point, not to replicate that. So that is something important for us to understand. So with those words, I think unless anyone, I have to open it up, anyone has some final words to say, otherwise we will close that. Sunil?
Nothing from my side, thank you.
Kamlesh?
Means that I'll just repeat what you said, that we should be looking at what are now in this context are most low-hanging fruits and put it in our context, because as you said, the Turkey, because they might have had their own compulsions at that point of time. So we can actually go and
Manish?
Nothing more to add, Som, only gold savings account, maybe with or without any incentive.
Yes, you can go, send your RM, I'm opening it tomorrow. Harish?
No, I have already summed up, and I concur with the views of Kamlesh ji that we need to had to start with the low-hanging fruit, and that is important to start.
Neville?
Nothing to add.
Great. So with that, I think we will close it. We do hope there is, Finance Ministry, there is RBI, there is, I don't know, SEBI, there is no one. There is IFSCA. I think we should just put our heads together and give this one more try. That's the point. It is not to belittle the other concerns that the government has always had or RBI has had. I mean, we all know it and knowing the industry. But with the exchanges taking a little bit of the pressure on the physical side, I think it opens up new vistas. So with those words, thank you very much for giving us this time.